Imagine this. You're back in the early 2000s, flipping through stock listings. You stumble upon a little-known company called Amazon. Or maybe it's a quirky search engine called Google. What if you had invested then? We've all heard those stories, the ones about everyday investors who struck gold. They found the next Amazon or the next Apple, and their lives changed forever. Well, guess what? Those stories aren't over. They're happening right now. The stock market is a breeding ground for future giants. Companies on the verge of revolutionizing industries, changing the world, and making early investors very, very wealthy. But how do you find them? How do you separate the future apples from the companies that will fade away? That's what we're going to uncover. Get ready, because we're about to dive into the exciting world of identifying the next big winners in the stock market. Finding the next Amazon or Google isn't about luck. It's about recognizing potential. It's about spotting the signs of explosive growth before everyone else does. So, what should you look for? First, explosive growth potential. We're talking about companies that aren't just growing, they're skyrocketing. Their products or services are in high demand, and the market is eating them up. Second, innovative technology. The next generation of giants will be built on groundbreaking technology. They're disrupting industries and changing the way we live, work, and play. Finally, market dominance. Look for companies that are poised to dominate their industries. They have a clear competitive advantage, whether it's a killer product, a powerful brand, or a network effect that keeps users coming back for more. Remember, these aren't the only factors, but they're a great starting point. Now, let's get specific and explore the key indicators that can help you uncover these future titans. We're on the hunt for companies that are disrupting the status quo. Companies that are introducing something entirely new or dramatically improving what's already out there. Think about the impact of smartphones or e-commerce. These were game changers. So, how do you spot disruptive innovation? Look for companies that are addressing unmet needs, creating new markets, or making existing technologies obsolete. Pay attention to the buzz. Is everyone talking about a new product or service? That's a good sign. Next, dive into growth metrics. Revenue growth is crucial. Is the company's revenue increasing consistently and at a rapid pace? Look at earnings per share, EPS growth too. This tells you how much profit the company is generating for each outstanding share. Don't forget about scalability. The companies we're after have the potential to grow exponentially. Their business model allows them to expand rapidly without a proportional increase in costs. Think about software companies. Once they've built their platform, they can sell it to millions of users with minimal additional cost. Let's bring this home to the NSE, India's national stock exchange. Right now, two companies are flashing signals that scream future giants. They're using innovative technology and riding powerful market trends. First up, Tata Elxsi. This company is a global leader in design and technology services. They're deeply involved in electric vehicles, connected cars, and digital technology. Tata Elxsi is helping shape the future of transportation, and their growth reflects that. Next, we have InfoEdge India. They're the powerhouse behind Naukri.com, India's leading job portal. InfoEdge is also a major player in online real estate and education. As India's digital economy explodes, InfoEdge is perfectly positioned to capitalize. These are just two examples, but the NSE is full of potential future giants. By focusing on disruptive innovation, strong growth metrics, and market dominance, you can uncover them. Section 5. Riding the wave. Understanding market trends. Investing without understanding market trends is like surfing without checking the waves. You might catch a lucky break, but you're more likely to get wiped out. Major trends shape the future. Think about the rise of e-commerce, cloud computing, and artificial intelligence. Companies that capitalized on these trends early on reaped massive rewards. Today, the opportunities lie in areas like renewable energy, electric vehicles, and personalized medicine. Identify trends that resonate with you. What industries are poised for explosive growth? Which technologies are on the cusp of widespread adoption? Read industry reports, follow tech blogs, and pay attention to what venture capitalists are investing in. Remember, investing is a marathon, not a sprint. Don't chase short-term fads. Focus on long-term trends that have the power to transform industries and create lasting value. Section 6. Unmasking the numbers. Fundamental and technical analysis. Now let's talk numbers. Fundamental analysis is like looking under the hood of a car. You're examining a company's financial statements to assess its health and growth potential. Key indicators include price-to-earnings ratio, PE ratio. This tells you how much investors are willing to pay for every rupee of earnings. A high PE ratio could indicate high growth expectations. Earnings per share, EPS. This measures a company's profitability. Look for consistent EPS growth. Return on equity, ROE. This shows how efficiently a company is using its equity to generate profits. A higher ROE suggests better management and growth potential. Technical analysis, on the other hand, focuses on a stock's price and volume history. Traders use charts and patterns to identify trends and predict future price movements. Technical analysis tools include moving averages. These smooth out price fluctuations to reveal underlying trends. Support and resistance levels. These are price levels where a stock tends to find support or resistance. Trading volume. This shows the number of shares traded, indicating the strength of a trend. Both fundamental and technical analysis have their place. Combine them to get a comprehensive view of a stock's potential. Section 7. Your journey to stock market success. Finding the next Amazon or Google is a journey, not a destination. It requires patience, research, and a willingness to embrace risk. Here are your key takeaways. Focus on the future. Look for companies with explosive growth potential, driven by disruptive innovation and strong market trends. Embrace the numbers. Master the basics of fundamental and technical analysis to evaluate a company's financial health and growth prospects. Stay informed. Keep your finger on the pulse of the market. Follow industry trends, read expert opinions, and never stop learning. Manage your risk. Don't put all your eggs in one basket. Diversify your portfolio across different sectors and asset classes. Remember, investing is a marathon, not a sprint. There will be ups and downs along the way, but with the right knowledge and a long-term perspective, you can position yourself for success. Section 8. Join the club. Subscribe for more investing insights. Want to stay ahead of the curve? Craving more insights on how to find the next big winners in the stock market? Subscribe to our exclusive newsletter. We'll deliver cutting-edge analysis, expert tips, and actionable insights straight to your inbox. Don't miss out on your chance to become a savvier, more confident investor. Join us on this exciting journey to financial freedom.